Good morning. We're doing homework, and it is 9:21. A record week. It seems like we've said that every week. We're looking at the S&P. We see that we broke records, and almost every day. They're buying every dip, literally, doesn't matter how small it is, and they're trying to make a higher high. I will have a strategy video later tonight, at the latest tomorrow morning. Depends where you are in the world. I'm in California. It may come to you very late. And now it becomes to, will anyone ever talk about valuation at some point? I've been sent over from members like you, everyone is sending over metrics like this hasn't been this expensive ever or since 2009. In fact, I'm starting to get a lot of emails comparing it to 2009. A few months ago, I said it's definitely not the same, but now the valuation comparisons are starting to be a thing, a talking point. So just be careful with that. If you take it too much, you start trading what you think is right, regardless of what is happening, and that gets to be dangerous as well. So you're looking at the S&P. The simple take on it is that we leveled up from 652 and we could be heading to 670 or 75. Those are two significant Fibonacci levels relating to the August correction, which we had two dips in August. One has a Fibonacci at 670, the other one 675. Round numbers, go figure, huh? So that's what you should keep in mind. Just for a reality check, in 2009, the S&P bottomed at 66. We are almost at 666. So just for context as to how far we've come. And if you want to draw the comparisons, you should see the levels. The valuations that I usually talk about, it's not like where is the S&P in size, but rather how hot is it compared to its usual valuations. And you can take it down to the granular level like each company. But the big picture is it's almost double what it should be. So that's a statement regardless of time frame. Is it a bubble? I guess we will find out in hindsight, but it is bubblicious. There you go. Let's get started. I believe we have 72 tickers. We will start alphabetically, of course, with Apple. Apple broke out on Friday out of nowhere. The market needed a leader. Oh, let's take a picture, a visual, a perspective look on the market on Friday. This was the market on Friday. It was green, but you can see here there's a lot of red in there, but giant green boxes. So Apple alone is probably half the red. If you neutralize Apple and Microsoft, for example, and Alphabet stocks, you will get a red market. But it doesn't matter. It did click the green. So that's the thank you that the market owes Apple to start it. And it started out the day strong. So Apple is making a run. From a longer perspective, it is lagging, trying to catch up. So the market has made high over high. This one is stretching itself into trying to break the new highs. Apple itself has a lot of problems at 250, and I would contend that this is a big problem as well, with just 247 and change. And if these two are a problem, then this one is as well. However, every problem is potentially a breakout opportunity. Now, if you ask me, before the breakout, it should dip a little bit. So if Apple drops to 228, it shouldn't surprise anybody. It'll be difficult. In fact, it left a big hole below 220. So I wonder why they did that. I mean, they could have spent a little bit more time consolidating in this zone. They seem to not have a lot of consolidation. And you can see it. In fact, look, there's a hole in the volume right there. So remains to be seen if we ever come back down here. Yes, I bet you we will come down here. It's a matter of time, right? So I wouldn't buy a put for it, but Apple may have up to a 10 to 12% drop to consolidate. That is not a call to short Apple. It is the leader now, and it has a catch-up trade to make. So if the market needs to go higher, this is where it goes. What I can do is, we won with this one. We can reopen the same trade. The credit call spread won, and we can reopen a similar trade. And in fact, I might do that this week. you just want to be careful to place the credit call spread somewhere not in harm's way. Having said that, this big red W on my screen also inspires a dip. However, they have gone past the easy eyeball mark that, hey, they're breaking out. Yes, and unfortunately, for those who are trying to short it with conviction, you can't, because the stopping point of this red W is way up at 260 at a new high. So I wouldn't buy a put at all. If maybe a put diagonal or a put calendar, but credit call spread would be the better way to do it. If I own shares, I would sell covered calls with confidence to put my shares to work. ALAB rocket ship, good P&L, quarterly basis and year over year, relatively young company, so I don't know enough about it to trade it for myself. Usually I want to go with the flow or buy the dip, which is my ideal situation. We don't have a buy the dip situation here, and I don't know enough to go with the flow at this altitude. I mean, the easiest thing to say, in July it was $100 and now it's $250, $260. I don't know if the prospects improved that much. Maybe it had a few headlines. Oh, it's making a deal with this company and that company. How about we go with Nope? Nope is, if you're new, it's my acronym, not an obvious point of entry. It doesn't mean it doesn't double from here. It's just not an obvious point of entry for me. Momentum traders, you know what you're doing. You can buy high and sell higher. If you want levels that mean something, you can write them down. Actually, I'll put lines for you. 220 is one. That is a level like from candles, like just from levels perspective. Fair value gaps are more like to 200, 199, 198. There are 100 other ones below because of the speed with which they rallied. So like there's one down here, for example. At some point, ideally, you want to cover those. But like I said, if this was Apple, I'd believe that more than a stock like this one that's trying to establish its ranges. I don't know enough about it to say anything about expecting 150 anytime soon. But expecting a dip down to the trend line wouldn't be crazy. So 220 to 205 to 200 is fair game along in this rally. Applied Digital. Look, Nope. Okay, so I said Nope at some point and I missed out on a little bit. I don't know when I put this in there. It's physically placed right there, so I would have missed out on if I said Nope. 13%. But this one is also parabolic. Now, I don't like this one nearly as much. The P&L there, the speed with which the losses are growing are faster than the sales are growing. The other stock was definitely not the same. It had a healthier P&L. So the story is what works for this stock. So do your homework on the story. And if you're an investor, I'm sure it looked great for somebody up here. And look what happened later. Not for me. Good Lord, yes. Oh my gosh. So I don't enjoy looking at tickers like this. Like there's no commitment from the investors. At one point they love it at 100, and another point they wouldn't touch it at pennies. There's something happened here that it jump out of its own skin and jump in as another company. I don't understand. So just do your homework if you're an investor at these altitudes before you jump in with complete faith that they are going to run it up again. Technically, it did break out from 1750, 17. So a dip into 1650 or 17 would be the idea to buy the dip into the moving average, basically. Technically, buy the dip into the trend. ARM, I sent out a note on ARM. 2 or 3 people came to me, is it time to get long ARM through a credit put spread? I was like, it's time. It is tradable. I don't love it to own it at these levels. So if the credit put spread gets tested, I will probably just take the loss. Usually I would say I won't take the loss. I will take the shares. But we've traded ARM pretty well. We bought the IPO. It dipped lower than the IPO and then went to 70. The IPO, I think, was 52. That where I got in for us. And then at 70 something, I got out. 77, 75, I don't remember. And then on every dip, sold puts with confidence. Here, I would sell a credit put spread with confidence, like you saw my note on Friday, into the support. Support zone, anything below 140. it gets stronger as you approach 128. If you're going to tell me ARM is going to lose 128, I would say the market is having a correction as well. Well, having a few red days. In that case, then 115, 112 would be the backup support zone. And rallies, you see that red box that we rallied into around 158? That was an open candle. They came so close to closing it, but they failed. Well, I wouldn't call it failed. Some people would argue the fair value gap that has been closed. So I wouldn't buy a call because they left a few markers up there that they didn't close up. Yeah, without a catalyst, I think this one is topped for now, and it's not going to have enough energy to take out that 160. Famous last words, watch it open at 220 tomorrow, some buyout story. Anyway, that's the story this year. Support zone, yes. Credit put spread, yes. Debit call spread, not for me, but yes. Out in time. Give yourself time. Buying shares, starter position, okay. I don't need to add shares if I own them. If I have them, I would sell covered calls. That pretty much covers every scenario with it. Short it? No. The letter B. Oh, Barrick Gold. That's correct. Ooh-wee. Okay. So GDX, which where this one is in, the gold miners, have two things go. Normally, how about, you don't see this often where gold is an all-time high and stocks are at all-time high. Not only that, they're both exploding. So gold had 2 red days and then an explosion on Friday, and silver even more. The GDX soared more than gold, if I remember from memory, and this one is part of it. So enjoy it if you're long. If you're looking to get long, not for me. This is the gold story starting to feel like 2011. If you're old enough to remember 2011, this is the same thing. At the time, I think it was approaching 2000, and everybody started to talk about 2000 like it was a pie in the sky. It took it 10 years, maybe more, before it recovered and got there. And here we are inching into whatever, 4,000. Not quite, but you know what I mean. I am getting calls about 4,000 and 8,000. Now, when we're in the 3,000 and somebody says gold is going to 8,000, I don't disagree. Gold is going to $1 million if it doesn't go to zero is the answer over time. But to be talking about 8,000 now and 7,000, even 4,000, I would think there's a lot of hope built into that sector. Barrick is breaking out. That's the amateur way of looking at this, but that's what's working these days. You might get enough people looking and propagating the news that, oh, Barrick is just barely breaking out. It's going to 46. If you hear that and you believe it, go for it. And let's see historically what that has happened. Oh, for sure. You're going to have conversations about Barrick is going to 57, which is another breakout opportunity. And then they'll tell you Barrick is going to 100, because then you would have a bowl that big. I don't do that. For me, Barrick is going into a prior bad area. And if I ask these people what happened the last time they bought it, they wouldn't have good things. How about the battle that the bulls lost here? How about this battle that they lost here? So they have a lot of opportunities to fail into prior trades. And by the way, that was from the 2011 rally. You see? So gold in 2011 had a crash. It lasted 10 years, maybe more. So Barrick has not recovered yet from that. Okay, and if you have never seen gold on that time frame, you can look it up. Let me see if I can get you there. There's 2011. It fell 40%. And it lasted, let's see here, 108 bars. These are 108 months. So that's a long time. Just for perspective. Okay, let's go back to what we were doing. Hopefully that's enough. I mean, it's definitely a momentum trade. I wouldn't start investing there. Boeing. You saw me. I showed it Boeing not too long ago. It got under fire. I got asked, what do you do now? I said, nothing. The short was out in time. That's why I leave time on the clock. This orange doohickey played out. If you want, it looks like this. Usually from here, I say, if we rally, we might do this. So we didn't rally. We just did that. I am short via a bear call spread, credit call spreads. Shorted a call, bought a call. I have like 6 of them scattered throughout the year. There was only one that was under fire at 240, and it's not anymore. It is statistically viable. So I'm not afraid of a spike in Boeing. Also famous last words. So that's a great company. And I don't understand the hype of taking a company up this much without a change in prospects. So 80%, 88% rally. Let's just ignore the entire April correction and go from February levels straight to the high. Avoid April altogether, 37%. That's better than the market, I think. So I don't think it's better than the market. So the credit call spreads were viable. What do I do with it now? I am not tempted to do a credit put spread. There's weakness in this collection of ticks in the volume area all the way down to 195. I'm not calling it to go to 195, but they might want to explore some sideways and drifting lower in order to establish a better base. You can tell where the breakout happened right there at 188. You can tell where they tried to retest the floor, but they haven't. So you can see the volume weaknesses that they're exploring. So there's not, look at the volume here. You've got a mountain of volume there. So I don't know if it's a bottom. I would not sell a put spread against my credit call spread. But if I had a lot of those credit call spreads and they were under fire, I would trim it. Buying calls, absolutely not for me. You want to buy shares for the futures, fine if you're starting. Selling a put spread, not for me. Selling a put, definitely not for me. What do? I'm just biding time. Time helps the credit call spread. I might revisit the position before it reports next, and that would be in 31 days. BABA. So if you were in the live room, you saw me short, not BABA, but I would. If I'm long BABA, I'm out. There is no way I'm staying on top of a stock that does that, even if it goes double. We shorted BABA indirectly. We were talking, somebody brought it up, I think BABA or Baidu, and we went down the Chinese ETFs. We looked at FXI and EEM, and I just bought a put at EEM. So maybe I'll share that trade on Monday for the rest of the people that are not in the live room. I don't have a lot of conviction because I don't know much about China, and I believe this rally got goosed, like got stronger on rhetoric that Nvidia might have issues with China, which is kind of weird. So anyway, I don't understand what this rally is all about, but I know it's a, like that red W says that BABA needs to go down to 144, I'm going to guess. I don't see the lines. Yeah, 140. And the second one I won't mention because you guys will laugh, like 125. So let's go. How about this? A dip towards 140 wouldn't surprise me to establish a better base. If you're looking to go long here, you won't have my blessing. You can, but it's not for me. I don't chase momentum like this, but if you are a momentum trader and be honest about it, then you can go ahead and do it for yourself. Right, but the timing of it, thank you for that. The timing of it was like the harsher the headlines on Nvidia, the bigger the rallies in Chinese stocks. That's what I noticed. It could be a coincidence. This still stands too high. Like I said that here, look at where it was right there on this rally. THTH, some of you have not been here long enough to know what that is. It's too high to chase and too hot to short. But I did choose to short it indirectly by buying a few puts in the EEM. I don't believe those were expensive to get it out of my system. Blink, charging. Okay, so it's got life, almost went to zero. Did they reverse split to stay there? No, good for you, management, good for you. All right, so it's off of the zero mark. Now it has to deal with the 160, 180 resistance. Technically, those should be problem areas. If you believe in the company and you've invested in the pennies, then good for you. I don't like this P&L at all. I don't know anything about it. I think, we can have a whole discussion about EVs. And if you've been here a long time, you know that I was right about them all along. And the whole world went a little silly with the idea. They do have a great spot in the world, EVs. I live in EV land in Southern California. And so I have nothing against EVs. But the realities that we had priced in earlier about EVs opportunities did not come to fruition. Now, I don't know how this will change if we go to solid state batteries. So that's the big variable there. I honestly don't know. You might want to read up on the subject. How will the opportunity for a charging company manifest, sales or not, sales increase or not, if we switch over from the batteries we have now to solid state batteries? That's a game changer for EVs, by the way. Bitmine, I don't know what you're asking. This is a GME type of stock. I don't trade these stocks because I'm really good with charts. I'm really good with options. I have logic and I can do homework on fundamentals. None of those skills gives me an advantage here. It's all about who do you know and what do you know, and it's all about hype. I don't play a game that I don't have an advantage in. Like, why would I? That's my statement. If you know the ins and outs of the stock, just use common sense with the chart. So I'll give you levels on the chart. 70 is a difficult zone through 75. More difficult at 90. Just do with that information what you need. Somewhat of a support at 40 and 30. If you lose it, nothing until 10. And this one did reverse split. That's why I said good job management, because here's what happened. In May or June, they reverse split 1 for 20. So the stock now here really is $3. Okay, that's what it is. It says 60, but it's not. They reverse split it 1 for 20. And to not get delisted. So the EV company, charging company, risked getting delisted and had confidence that they could bring the stock price up. These guys gave up and said, let me reverse split my stock so I don't get delisted. And then the stock exploded. They didn't need to reverse split. Anyway, but this is a $3 stock and I'm not happy about it. So just know that. I don't know what caused this here. So do your homework and see how realistic and how much have they priced in good news. There was a huge increase in sales, so it might be totally legit, and that's a whole new world for it, like GE. GE reverse split too, and it didn't need to. Anyway, CAVA. So we went long CAVA on the first dip, and I haven't since. How did we go long? I sold the put at 35, and I said, I'm closing it. This is old, okay? So if you do believe in owning the stock, there goes the opportunity coming up for you to repeat this trade of some sorts. At the time when the stock market was falling as well, we got almost $200 for selling one put, which means if we had been assigned at 35, we would have broken even at 33, which shouldn't be a bad entry point. That's 2024 levels, so base of 2024. So if you want to own shares, you can sell a put until they give you those shares. Hopefully that helps. As far as levels, it's falling into 59, which is the last bounce, and it's pretty old. It's from April of last year. The bad thing about it is when it's that old, it's not as effective. Like it could be a zone more so than a hard line. Buenos dias. You can see that was an area of difficulty first. So clearly between that level I just mentioned and 52 and 50, there should be a strong buyer. So somebody that owns the stock and hasn't gotten out, I wouldn't get out here. If I have a credit put spread, I'd be brave. If I wanted to sell a credit put spread, I can. 51 days and then the report earnings. Buying calls, maybe because of a descending wedge, but you should remember that this is happening when the market couldn't be more bullish. Well, what would happen to the stock if the market actually has a few bad days? I shouldn't say that. A few red ticks. We haven't had a bad day in a long time. Okay. ChargePoint. What was that other company? Blink. Okay. So everything, if they're both in the same business, everything I said there applies here. They reverse split, you see? 1 for 20. So this stock is actually 20 cents. Anyway, I don't like reverse split companies, period. Sometimes it works. Sometimes it doesn't. Lower lows, lower highs. So if you lose the baseline they just established, you're going to 6 or 4. If I own it, I'm not adding. You can add the 0. And this is not a kind of stock you average down in. I don't. I only average down if I initially don't take a full-size position. Let's say 2 years ago you decided to enter a position in this one and you allocated $4,000 for that opportunity and you bought $4,000 worth of stock. If you add more here, you're just making your problem bigger. However, if you started with $2,000, now you have $2,000 more to invest and you invest $1,000 of those two, that's different. I'm okay with that. I'm not okay with dollar cost averaging. I'm okay with averaging into a full-size position, but not down from a full-size position. Do your homework. The chart has no clues except lower lows and lower highs, and the stock market looks like this, and it's looking like that. CHWY, very choppy stock. We've gone long dips before. We were long or trying to catch the falling knife in 2022. And it was difficult. We won in the end, but it was difficult. So I learned something cool about it last time they reported. I said you can own stock on the dip. I forget the number. Someone set me straight in the live room here. 80%, somewhere up there. 80% of their revenues are recurring. So I had the question, does it make more money from selling things for dogs and cats or consumables that are baseline? The answer is definitely consumables. So I don't know if it's food, cat litter, or a combination of all of those. So there's not a lot of discretionary spending in there. So their sales ticket is heavily dependent on the pets existing. So even if the economy hits the skids, I think their sales are somewhat stable. That's a good thing is what I'm saying. So the baseline that they just established around 34 has a backup of 29. So if somebody bought the dip at 34, I think you did okay. Technically, I can justify going into the mid-20s, especially if the market goes sour. So leave room to add on a dip. Sell puts to own shares on red days or sell put spreads would be okay. CME Group, I don't know why these guys would not be higher than here. Look at this bottom line. Their gross margins must be unbelievable. This is the gross margin and they have no operational expenses. This is amazing. So one would wonder, why is the stock so choppy when it's like minting cash? Look at this. Wall Street is crazy out of its mind. That's all I have to say. So, okay, this baseline worked. You can repeat it here. So 244, 240 is a super strong baseline. But again, this one heading south, market heading north. So they might push it to 274. So if you just got long, I would start exiting as we approach 267 or higher from a trading perspective. If you got long for an investment, you got long. Chipotle. Now I'm seeing negative campaigns about it. I don't understand. Love turns to hate. Everything I'm hearing about it has been in the news forever. In fact, I don't like Chipotle. Their food is bland. I'm very impressed with how quickly they get me out of the store. To me, a restaurant is an experience. I go there to have fun, not necessarily to eat the best food ever. It's just an outing. And for them, it's like, get in and get the fudge out. Is the feeling I get when I go there. So I particularly don't like the store. It hit our first target. Our second target is down in the low 30s. Not necessarily wanting it to go there, but what's going on is it cannot find a floor. The CEO left and the stock hasn't recovered. I don't think it's the CEO thing. Maybe it is, maybe it isn't. It's the comp sales growth. So a store like Chipotle was amazing because year over year, the stores that are stable used to beat their sales from last year like by a mile. And now I think it's single digits. I don't know, double check. So I remember looking at the metric and it's like, oh my gosh, this is not the Chipotle of old. Technically, it did trigger a pattern with a couple of targets. One has been met and the other one is down here. Let's split the other one. So 35 would be a dang good bargain. That would be the breakout from 2023. So How about it did? How about we can say it's not an obvious mistake if you started investing in Chipotle and you like it for the future. I wouldn't add to my position. I wouldn't load up, etc., etc., unless you have a really good plan that way. Okay, COTY. Oh, I don't like stocks that are doing this in a market that is doing that. I just don't like it. What is this? Branded beauty products. Okay, that's pretty ugly. Sales quarterly, they're drifting lower, but it's not a disaster. But the chart is, oh my goodness. So let's zoom out and see where did it come from? Oh, all-time low. Okay, so I guess you're seeing if they want to revisit the $3. Now, if you know this company and you want to start to invest in it because of that $3 baseline, I don't mind it. There is a gap. There's a gap to 340. Oh my goodness. Okay, so there you go. If you ever wanted to buy it cheap, this is cheap. I know nothing about it. I don't deal with stocks for myself under $5. The only one I did was the one that made us a lot of money. I forget now. Health insurer. It'll come to me. That was the only one that was 80 cents. And so with this one, I don't know enough about it. If you know that Clover, yes, thank you. If you know the business, it may be another Clover for you. Thanks for that. I don't know what that is. Is there another coup? You mean Coupang? Maybe you mean Coupang. I'm going to give you a pass on this one. Coupang? Not for me. This stock is a mystery. It doesn't go with its opportunity. I mean, the P&L was good enough and it was going to hell here because we were long Coupang as well during the 2022 correction and it wouldn't find a freaking floor. And now it cannot find a ceiling. Well, how about this? I'm going to highlight this box as difficult because they bounced from this spot. They failed in this tick, which they're approaching around 38. And they failed around 30, which they overcame. Big volume hole, so they might be able to approach 38. How about that? If you're a momentum trader riding it, looking for a perfect exit, maybe closer to 38. But me, if I rode it from down here, I'm out like a light. Cracker. No, Circle. I call it Crackle. Circle is a stablecoin issuer in crypto. So I own their product for a long time. It's going to be here. And it's if you didn't get it at the IPO, you had multiple opportunities to sell puts to buy it at the IPO. We sold put spreads on the last correction, and I believe it worked. I'm long through those sold puts and put spreads, but I may have closed them. They may have worked. If not, I may have one left over open at 50 or 60% of its maximum gains already. So if you're accumulating shares for the long term, I think it's here to stay. I do want to warn you that it might be very closely tied to the price of Bitcoin itself. So if Bitcoin falls, this one might suffer a big fall. Will it ever be below the IPO? It can. That's what I'm saying. Bitcoin has often lost more than half its value. Now, this might be a new way of Bitcoining because the government and Wall Street got their grubby hands on it, which means they have futures on it, which means that they would lose fortunes if they allow it to be as flexible. Nick, it's decentralized. How can they control the price? They can't. They can control us. So they can control us into chasing it up or down however they need to. Not a conspiracy theory, it's reality. That's what happens. So I like it as a starter position. I like it as a core position. I don't have the need to add if I'm already long. If I'm thinking about owning some for the future, I would definitely own some, but not more than 20% or 30% of my allotment. CRM, awesome company. Why is it going opposite of the market. Market is doing this, it's doing that. Lower lows and lower highs. So, okay, it hasn't made a lower low, but it has been making a lower high. So I would contend that there's a big move coming. Whether it revisits the 230 or it goes to 265, I don't know, but there's a big move coming. It's not imminent, like minute to minute, but this and that tell you that the energy was this wide, and now it needs to do this or that. Okay, so the market is at all-time highs. As long as the market is bearish, bullish biased, the odds of coming up to 260 are a little bit better than losing 232. Okay, so credit put spread, okay, I'm good with that. Maybe an iron condor that expires before its next earnings report, which coincidentally is pretty far from now, 79 days. So I'll add it to my list. It's already there. I would sell a put spread with confidence. I would not sell a call spread with confidence unless I'm long stocks to balance. CROX, exciting trader, the stock. Iron Condor would work, although it did have a moment not too long ago. That moment made, now we have two bounces around 75. So maybe you can count on it as support. Now, if we lose 75, 74, you will end up in the mid 60s. It's almost a guarantee. Rallies into 90 are going to be hitting sellers. Rallies into 96 are shortable, 95. Prior support becomes forward resistance, kind of an idea. So the green box, Iron Condor, maybe a little bit lower now, wouldn't make too bad of a trade. It'd be okay. Dollar General, I don't usually trade this stock for some reason. It feels like GME. GME is not an insult. It's just a type of stock that is unpredictable. And my skills are neutralized by this unpredictability. 96 wouldn't surprise me, give or take $1. If it hits a jag of selling, it probably hits 88, would make a better entry point. Rallies into 112, I would exit longs. None of this is investment. This is trading comments. How did I build this layout? On TradingView layout? I can't send it to you, but I'll tell you what to do. Come into the live room tomorrow. Dow. Also concerning why this is doing that when the market is doing this. Levels to expect sellers 27, 26, buyers 21. Lose 21, you end up at 18. Take out 27, maybe you get to 29. 29 and a half should be a hard sell. So are you an investor? Decide what you want to do with it if it goes to point A or point B of the ones I just mentioned. If you're a trader getting long here, I would exit as I approach 28, and I may stop out if I see it, considering losing 21. 32 days until its earnings. Fabrinet. Good P&L. Stock looks like the S&P. So as long as the S&P is healthy, this one is maintaining the trend. Buy dips. The next dip to buy would be 340 to 330. There should be buyers there. That's a trading comment. If you're an investor, that's a completely different conversation. Consider selling covered calls if it's liquid enough. You can generate some pretty good cash on this $300 stock, almost 400. And if you get a dip into 300, that would be a gift. Like the August dip, that was amazing. And technically, the breakout happened from 240 to 250. So if the market crashes and you get an entry there, that would be also a pretty good gift. Fortinet. Okay, so this is an amateur market, and they're probably trying to, quote, fill the gap. And the gap started at 96. So I wouldn't short it. 82 was the breakout. 88 could be target 1. I'm trying to find you areas of importance. 82.50 is important. 90.3 is important. Yeah, that's all I got. And there's literally a big hole in the middle. You see there's no volume here, recent volume. I'd have to zoom out to see any volume. So this is not just a physical gap, it's actually a gap in recent volume. So the drift higher doesn't have sellers. That's what it says. I wouldn't short it because I don't have any reference points other than the ones I mentioned. FUBO. I did trade this one during the pandemic, I have to admit. And I don't know what that was all about. Some sort of a partnership probably. So you can consider that the moon. And they're pretty close to a little bit higher than midway. So I would consider 350 as a good pivot point. So you've got support at 350 and resistance starting 520. That's the trade without any headlines. I wouldn't chase this gap, and I wouldn't chase any gaps up here either. But this is a crazy market, and this is definitely a crazy stock. So whatever happened here, it's talking points. I don't see it in the P&L. And it's been a while. That was January. Where is the result of said conversations? With that, that's video number 1.